Hi, everyone. Thanks for tuning in to another episode of Our 2 Cents on Your Dollars. I'm James Enriquez.
I'm James Credo.
I'm Alexis Villarreal.
And we are here with Raymond Moreno, Residential Mortgage Loan Officer.
Woohoo. Well, hello there.
What's up, Raymond?
Hey, buddy.
Nice to see you all again.
Something about Raymond. What was that show?
What?
What?
Everyone loves
Everyone
Raymond?
loves
There we
Raymond.
go.
Yes,
All
yes.
right. Yeah.
Everyone does.
Only if my mortgage rate is right.
Right. I've heard that.
Yeah, have you really?
I've heard
thought it was
that.
in.
Yeah. It's like Costanza, can't stand you.
Okay.
Sorry.
No, I love it. I love a good Seinfeld reference.
That's right.
Okay, so rates.
Rates. Rates are have recently come down from their highs somewhere in the 8s, just, not too long ago, early part of this year, rates were hovering in the low 8s, and then they, come down because the Fed has done some interesting things and lowered rates a couple of times. But today, where we sit with rates, and who knows by the time this gets out there where we'll be, but we're in the low 7s and upper 6s, depends on the day. Rates change day in, day out, all day long. But right now, there's a trend for rates to be continue to go lower, especially with the new administration coming in January.
When you quote those rates, you're quoting 30-year, right?
In most cases, we are quoting 30-year. That's what a good part of the population, they decide to go with the 30-year. But if you go with a 15-year or 20-year, rates could be even lower. And something to mention. There's something out there called a 2-1 buy down. I'll give you an example. A 2-1 buy down is a really good option for most people. So, for example, if your rate is, like I said, an example, is 6.5, the first year with the 2-1 buy down could be 4.5. The second year could be 5.5, and of course, the standard rate, is 6.5. And that's a really good program because it allows for a future refinance if rates go down, and you can make it permanent, over the rest of the loan life.
How do you qualify for that program, Raymond?
Us lenders have these options available to you. For example, I work for a broker, and a broker has over 100, banks and lenders that we work with, and they compete for the client as well. We input the client's information, and it populates options, and that's this buy down option is really the most popular.
Wow.
So it's a buy down, right? 2 for 1, just for our audience, right? It allows them, so anyone can apply for this, or everyone can be approved?
Yeah, everybody can apply for it. Speak to your lender and ask them, tell me more about the 2-1 buy down, and then they'll present the options.
Is that the same thing as like buying points, or isn't there some?
No, it's buying points is, for example, if the current rate was 6.5, and if I buy points per your example, and I pay $5,000, and now my rate is 5.875. Well, I've just paid some points to get a lower interest rate, and then that's permanent over the 30-year.
Which one would be more effective, I guess?
It's really, no one can really forecast, where rates will fall. And I would hate to do the same. I don't want to forecast, but, trends are out there. And I do think in the next year, specifically within 2 years, you'll have a great opportunity to refinance to get a lower rate. So it's really up to the individual.
I know that that's right. If that is true, right? What is like a threshold, a good rule of thumb, right? Because I've had different conversations where people say it needs to be a certain percentage for it actually to make sense.
Right. So I'm so glad you asked that question. It's great. What happens is, if you really feel that the home that you're buying is a home that you're going to be in for the long term, 10 years, 20, 30 years, do the buy down is what I would suggest. But if you find yourself in a position that you'll be in the home, 2, 3, 4 years, maybe the 2-1 buy down is the best option.
When you say do the buy down, you mean buy the points?
By the program of the 2-1 buy down, where you get the lower interest rate, 2 points down. For example, the 4.5, the 5.5, and maybe the standard being 6.5.
Yeah. Is it called a buy down because you have to? The closing costs more expensive than just like
Not necessarily. No.
Oh, okay.
No, it's just a program out there that's available.
Okay. Cool.
Are your customers or people you've talked to, are they waiting to buy a home because rates might be lower, or?
So, another great question. Thank you. What we're finding right now is that in most cases, people are not necessarily, selling their homes. I don't know if you've noticed, a lot of people have some really great interest rates. You might as well.
2%.
2%, 2.5%, 3%. Those. I will tell you right now, I don't see we ever going back to
Notice
2.
that smile.
He's still smiling.
I have a 2.5 as well, but
No, I said 2.
oh, sorry. That is a great deal.
We got it. You got a really low rate.
You got a low rate. Those are fantastic. So great being, right on it, getting your great rate. But I don't ever see that happening again, where rates are to that level, that low again. But I feel that in the near future, we could. If we get 5.5 or 6.5, or 6, I think you're in a good place. My parents, when they bought their home, their interest rate was 12%.
Wow.
And
I've heard of 17s.
I've heard of 17s as well.
They still bought a home.
When I bought my first home, back in 1999, when y'all were still probably in elementary, right? No, I'm joking.
Actually.
So, yeah, probably. I paid an interest rate of 8.5, and I loved it. 8.5. That
was a great deal.
That is wonderful.
Steal.
And then, the market changed a little, and a few years later, there was an opportunity for me to refinance and go down to 7. I'm like, wow, I got to get that 7. And now people are, being cautious about getting a 6.5 or a 6. Come on.
So it's interesting you brought that up because, right, I had this conversation at the house quite often, right, in regards to wanting to go into different homes, right? But one of the things that I feel when I've looked at rates is that under 4%, 3% basically is going to be some sort of catastrophic event again, right? COVID, something big would happen for them to do something drastic. Rates are normally kind of where they're at right now, correct? Historically, mortgage rates are kind of around the 6%.
Yeah, rates are in about the 6 to 6.5. Today, I quoted somebody at 6.5.
Is that for like good credit
for
score?
30 years. 30 years.
What kind of credit score? Good credit score?
No, 750. 750 is the average FICO score, is what I'm coming across. There are people that have lower FICO scores, and there's ways to improve credit for some people, and of course, sometimes even working with a credit agency to help them is even the best. But by all means, the lower the the higher the FICO score, the better the interest rate you will get. The lower the debt to income, what we call DTI, the better it is for the client.
You also talked about other programs, or you made a comment about programs. Are there other programs other than the 2-1 that are out there for new home buyers, teachers, or things like that?
So the great standard program out there is FHA has a great program that allows for the 3.5% down payment when you're buying a home. 3.5 down payment I find to be wonderful because it's an investment part on the buyer's part. They've saved some money that they're putting down, and also the threshold, the DTI, the debt to income, that is also expanded higher. Because what if that first-time home buyer has maybe a car under their name? That's a $500 payment. FHA has the most, in my opinion, the most forgiving program out there for the first-time home buyer. Good question. I had read somewhere there is a loan out there called an assumption loan. Have you heard of that?
Yeah.
Do you know what that is?
Yeah.
What do you think it is?
Where you, hold on, let me refresh my memory.
I'm not mistaken. It's something where there's a transfer, right? A transfer of the note.
You can assume somebody, whenever you buy somebody's house, you can assume the loan.
Yes.
But do you have those?
No, I don't do these loans, but I wanted to bring it up because I had read in one of the notes. An assumption loan is the opportunity that when, for example, someone is selling their home, whatever their home is, right? And they assume not only purchasing the home, but they assume the note and the interest.
Yeah.
That's fantastic.
Yeah.
So you have those people with that opportunity. Hey, I want to sell my home, and this is the loan, and this is the interest rate. That could be very attractive to some people because that rate could be
2%.
2%. Just these great rates. So I kind of wanted to mention that because I had read that.
Yeah. Do you know how do you find one of those?
I only have seen one person advertise in one of these magazines. Home for sale, and you can assume the rate 2.5, and I didn't follow up on how that transpired, but I mean, what a great opportunity. Who else is going to get that?
Right.
No one else.
I'll buy Alexa's house for 2%.
Will you? Yeah. Sold.
My wife better not be listening.
Good question.
So you mentioned 6.5%. Right now, how low can you get that if you buy points?
Let's see here. How low can you get that? I really can't say how low you can get that because the market changes all the time, but considerably lower than 6. Yes.
Really?
Yes.
Yeah.
You can. But it'll cost you a little bit, and you know what? Whatever it costs, I say whatever it costs. Some more savings out of your part, and that you get the lowest possible rate. It's the thousands of dollars that you will save over that lifetime of that loan. And that could amount to $100,000 in savings, $150,000 or more. But case by case basis, right?
Do you show them that?
Yeah, I was gonna say, is it really that simple where you just run 2 different amortization schedules and just compare how much the cost of to buy the points is?
You just said my favorite word.
Amortization? I love amortization. Yes.
I love amortization.
I thought it was cost.
We have a tool, and again, I sit with our clients. We sit with our clients, and we have the ability to say, okay, well, this is your rate, this is your payment, and this is 30 years. If you simply add $100 a month, $50, $200 a month, whatever the case is, this is your savings over this time period. You pay it off, in 24 years versus 30 years. There's tools, and working with loan officers, residential mortgage like myself, we have these tools available to us to share and, give, best practices.
How much? So the rates are set as by the broker dealer, or do you get to set the rate? Do you have a lot of flexibility over how much you can wiggle that rate?
So in my screen, I'll explain my screen. When I get my client, we full credit, we have an understanding, full picture of the client, then I have the ability to see all the rates for all the banks that I'm working with, and they are, like I said earlier, they're competing. If you go with Vanguard or whatever the case is, when you go with these options, they say I will give them this rate based on their qualifications.
So you don't have the magic power, right? So I feel like sometimes they think that Raymond sets the rates, right? They don't understand that.
I said no rates at all.
Are your clients able to find homes, Raymond? We keep hearing that supply is low. I don't know if it's the same thing for the Valley.
I have found that supply is low, maybe on the island in South Padre Island, but here in the Upper Valley, there's an abundance of brand new homes everywhere. There's an abundance of people selling their homes, but and they are actually staying on the market. Again, depending on when this video goes out, they're staying on the market for a while. So we are in a time where there's not as much competition. If you find a home, you'll generally pay what that sales price is. But I will share that once interest rates go down and they are even more competitive than where they are right now, you will find, buyer against buyer, hey, if you take my deal, my contract, I'll give you 10 grand extra or 20 grand extra. I've seen someone in my neighborhood here in McAllen had paid 80 grand over ask on the home sales price because they really wanted that home. Can you imagine? 80 grand. We're not in that market right now. Right now is absolutely the best time to buy a home. No doubt.
Is it, I guess it's the same process because you talked about new construction versus existing homes, same process in regards to going through loans through you?
Yes, same process. It's there is
isn't there something different in regards to like new construction loans? I know I've come across where there's something along the lines where there's either two closings. Maybe that's not dealing with your side. Maybe.
There are some cases where the builder has maybe a relationship, business relationship with with another lender, and they say, you know what, you go with this lender, I will give you, $500 or $1,000, whatever the case is. But I say, wouldn't you rather work with a broker like myself, and I deal with 100 banks? I think that's your best option. I'm like the Sam's of mortgage lending here. So I shop at Sam's. Guilty.
Lots of nice TVs at Sam's, man. So,
But do they have gold bars? That's what I'm wondering.
they do. They do.
I did buy a TV on Black Friday.
Of course.
Just one?
I found I try to see who would help me in the parking lot. I found you saw me buy my TV.
Oh, that's right.
That's right.
You had a big TV. You had a shopping cart.
I was like, how am I going to get this TV up here?
Man.
But we worked it out. Yeah.
Did he help you? I hope he helped.
He didn't.
He
There's
did.
no way.
He just walked right by you.
It wasn't at Sam's. It was at Best Buy.
Sorry, it was at Best Buy. You're right. It was at Best Buy. I went to Sam's first, but I bought it at Best Buy. But wow, there's quite a bit of savings on Black Friday, for sure.
Even the mortgages? No.
Even no. Well, not really, because I was shopping.
Oh, man. All right. You mentioned earlier about Fed cutting rates. How quickly does that trickle through to mortgage rates, if at all?
That I have found that in most cases, rates have already been affected, and presuming the fact that they're going to cut the rate. So, even though the Fed cut the rate at 10 in the morning, nothing's.
Market's already adjusted.
It's already adjusted. Everything's adjusted. Yeah.
That's a bummer.
Yeah.
I was hoping it was going to go a little bit lower.
Go to Raymond now.
Yeah. You mentioned residential. That's what you do?
That's what I do, residential.
So how, if I wanted to buy a fourplex for investment purposes, but live in one, is that still considered residential? Is that investment? Is that what's the difference?
It is a residential. Fourplexes or less is something we can help with, but in most cases, I have found that you could, if you live in a home in McAllen, for example, and you say all of a sudden, me and my 3 kids and my wife are going to move into a fourplex, and I'm going to live in one of them. The underwriter very likely will say, are you?
They asked that question?
Wait,
They don't
just sign it? Just say, oh, you want a loan here?
No.
Oh.
There will be a little bit more scrutiny on that. Trust me. If I was 25, I was 30 years old, I wish I could give even more people of that age group more of the advice of, buy yourself a fourplex. A fourplex is a great opportunity. In fact, you can even get one with FHA. With the numbers working out right, you can put in 3.5% down on a fourplex, live in one of them, and have that stream of rental income to help offset some of the costs. but you do have to have your affairs in order. A lower debt to income, a DTI, a job that you've had for over, preferably well over 2 years. Everything does have to line up, but a fourplex, is a great opportunity. I can't say it.
So you said
Go ahead,
I was going to say, you brought up something about having your affairs in order. I mean, what typically are you looking for or wanting for clients to have before you start having that conversation? What do they need to have prepared to come talk to Raymond?
I always, and the standards generally are, you want to have a debt to income of 42% or less. You want to have a work history of 2 years or longer. You want to have savings. FHA requires 3.5% down, right? We mentioned that earlier, but it wouldn't be a bad idea that you had, maybe 6 months of your whatever that mortgage payment. Let's say that mortgage payment's $1,000. You had $6,000, for 6 months in savings. You always want to have money for a rainy day.
DTI,
Debt to income.
42 is kind of like standard, right? Like I think 36 to 42, right? But
Right.
some lenders I've seen as high as 50. Is that right?
Right. So there is flexibility up to 50, but there has to be generally a other factors that allow that the underwriter says, yeah, I'll do the 50 DTI.
Like my TIA signing, like co-signing, or
maybe your TIA has your TIA has a 7, a great FICO score, 780, but she has $1 million in the bank.
Yeah.
And they're like, well, she could pay cash for it, but this is the route we're going. Does that make sense? Compensating factors.
Yeah. Well, I mean, that's cool that it's not just like a hard, no, get out of here.
Right.
Yeah.
Right.
is it still a person doing the underwriting, or is it AI involved? What's going on here, Raymond?
Good question.
Uh-oh.
We have found some lenders strictly use AI to underwrite. And then at the very end, I believe there's, hands on deck, all right, let's look at this file. AI has already, done its work to make sure it's a good qualified loan. My group that I work for the most part, it's still a person and, with experience and really looking at it to make sure that all, everything has been met to qualify them. But yeah, AI's where everything's going, guys.
Well, since we met our AI quota, what social credit? Is there a social credit score involved in the underwriting process? Sorry, bad joke.
Sorry.
You have to do good things to get a better rate. Yeah, got to be a good citizen.
Got it.
Okay. Do you have, Alexis asked earlier about things to get set up and prepared to put yourself in the best position to get qualified. Do you have a go-to checklist? Hey, make sure do these things.
Yes.
Pay off this debt, pay off that debt.
Right. So, as you know, not every person buying a home is just like the other. Everybody's different. We come across all kinds of scenarios, but the best practices are that someone has 2 years or more work history, someone who has a debt to income of 42 or less, preferably 36. Really, you want to have your make sure you haven't filed for bankruptcy. You're not in a lawsuit. You're not in the middle of a divorce. You're not in in a situation that you find that once you get going with a home and a contract, that there's a likelihood you would be denied. That's why it's so important. And most loan officers, including myself, and we sit down with someone, we interview them, we have a conversation, we really get to know them. Some people have said after our interview process, after we thoroughly qualify, do you want blood now? I mean, you've asked every question, but we really want to make sure that we go through the whole process and qualify them well. Yeah.
What's that process? Do y'all do reverse mortgages?
So I do reverse mortgages. I've been doing them for well over 10 years. I've been in the business nearly 18 years here. I specialize in reverse mortgages, also known as HECM, also known as home equity conversion mortgage. A reverse mortgage is a very unique program for people over the age of 62. And what it is, it allows for equity of the senior citizen who needs some cash. It allows for them to get that equity and it to be distributed to them either monthly, one lump sum, or in a line of credit. It's up to them. So we do that. There are some really qualifications. They have to have good credit as well. They have to have their DTI. They have to have insurance on the home currently and have their taxes paid up. And preferably the home either paid off or nearly paid off.
Why do they get such a bad rap?
Yeah, that's what I was thinking about. I was like, isn't there always just this bad notion behind reverse
Like
mortgages?
a stigma, right?
Yeah, a bad stigma behind it.
Yeah, they you know what? Reverse mortgages have been around since since Ronald Reagan. You remember that guy? Ronald Reagan.
I think so.
Best actor.
Ronald Reagan, and that time period, reverse mortgages were new, and years later, just like anything out there, they get better, and there's more protections for the seniors. The last thing anybody wants is for a bank to take a senior citizen's home, or some of the perceptions and what people think about reverse. If I do the reverse mortgage, I'm going to lose my home to the bank or to the government or to that people, FHA. That's not the case. These programs are here to help seniors who maybe have exhausted their cash, exhausted their savings, their retirement, or maybe the pension funds that they get, monthly. It just isn't enough. But if they had that little extra cash, maybe they could have, make ends meet. So reverse mortgages is an option. I have found, one of the most interesting conversations. It was really one of my first conversations that I helped this lady here in Edinburgh, Texas. She said, Raymond, because even I was new to the program. She said, Raymond, I want to do this reverse mortgage. And again, I just got introduced to it. I just started doing it. She said, I want to do this reverse mortgage because when I die, I'm not taking the home with me. And I looked at her and I'm like, no, you're not. And neither am I. Get your equity, get your money. She goes, I said, what are you going to do with all this money? She said, I want to go visit family, and I want to get a reliable car that I can go drive and visit family and visit, doctors and just go to the grocery store and just make my life just a little bit easier.
So you said something right now. So what ends up happening then?
So, good question. What happens when someone gets a reverse mortgage, and let's say it's an established loan, there's no monthly payment for that client. There's no monthly payment. Like I said earlier, they have to maintain their taxes, maintain their insurance, live in the home, and maintain the home. It's not asking a lot, those things. But the one day they say, let's say they 5 years down the road, they say, I've come across some money from a sister that passed, and I have this reverse mortgage of a balance of 30 grand. I have the 30 grand. I'm just going to pay it. They pay the 30 grand of the reverse mortgage. There's some interest and some closing costs that were probably attached, and it pays it off, and they're done. It's just like any other loan, except there's no monthly payment.
Is that normally what happens?
There's no required monthly payment.
But is that normally what happens?
Yes.
Most people pay off the note like that?
They have an average of 11 years that they pay off the reverse mortgages. Now,
I would think that's a misconception, right? Because my first thoughts are most people pass away, and then the kids deal with it, and they're the ones that end up paying the note off.
Well, the 11 years could include maybe some people passing away. So let's talk about that. If somebody were to pass away, grandma passes away there, and they had a reverse mortgage. And so we'll use some basic numbers, just estimates. The reverse mortgage, let's call it 50 grand, and the home is worth 200 grand. Easy number, right? So when they pass away, the children, the heirs, could decide, well, I don't really need mom and dad's home. I have my own home, my own family. I don't even live in the valley anymore, or South Texas. So let's sell the home. Okay, well, let's go back to the numbers. 50 grand is the balance. The home's worth 200. They find a realtor. The realtor will sell it for 200. The balance will be paid. What's the difference? 150 minus, fees to the realtor, and now that's their inheritance.
So it sounds like the person they keep title to the home when you have a reverse mortgage. The bank doesn't own it.
No, the bank doesn't ever own it. This is the home stays in the person's name. Yeah, for sure. It honestly, it's a great program. It's not for everyone. I will never say, the program's for everyone. But if you find that there's a senior citizen in need, and really are out of options, it's something to consider. I wish more people would think about it.
Is that something that y'all go through with them as far as, asking them what is it being used for? What are your needs? What's your health like? Y'all have those?
So every time we go over all these options, and one of the best parts of a reverse mortgage is there is a counseling session that's required. So even before Raymond can do an application for reverse mortgage for the client, they have to speak to a counselor, and the counselor says yes, they're a good candidate for a reverse mortgage. And it's the senior citizen pays nearly, I think it's between $180 or $200 for this counseling session. It's over the phone. It's about a 30 or 40 or maybe an hour call. And after that, they get a ticket or an email that says, hey, you've been approved to proceed with the reverse mortgage application. Speak to your lender. And that's when, with that document, I'm able to proceed with an application. So there is, many steps along the way to make sure that they're good a candidate, that they've had counseling. Me being here in the Valley in South Texas, I actually, in most cases, I visit every client that is interested in a reverse mortgage, because I want to make sure, I'm speaking, to them and explaining, face to face how everything's going to work, based on these estimates. And I even go as far as, let's review the home to make sure it's in good standing. Last thing I want to do is do an application on someone and they're missing half the house. I have gone to someone in far Texas, and they said, I need a reverse mortgage. And as I sat in their living room, and I said, what do you need it for? And she says, well, look up. And I looked up. I could see the sky.
Is that a good thing or a bad thing?
Well, I'm there to rescue them and give them a new roof. So it was a good thing. I'm glad I was there. I'm glad I was introduced. And, I get introduced and people find me either online, I'm online, Raymond Moreno, for reverse. And a lot of banks know that I'm, do this reverse mortgage program for people face to face. And they, wouldn't you rather work with someone face to face versus online or over the phone? It's, out of California, somewhere you're not familiar with. I enjoy, I go to H-E-B, I shop at Target, and, and I do run into my clients, and I love saying hello and shaking their hand and knowing, what, I made a difference in their life, and hopefully they say the same about me.
So you made a comment about helping people and I guess obviously denying them when there was obvious reasons to deny them, but any other reasons why you would deny somebody on a reverse?
Well, yes. In Texas, you are required to be the age of 62. But I have found quite a few times where the senior is 62, but they happen to be recently married to somebody who's 50 or 45 or, not of 62. And because of that, I cannot proceed. So that's one of them.
So if they're married and their spouse is under 62?
Under 62, I cannot.
Is that common law married too, or just?
Married.
Okay.
Can you refinance your reverse mortgage rate?
Yes.
Can. Oh, really?
Yes. You sure can. You can refinance your reverse. Sometimes we find that recently, your homes are have increased in home value, and you're like, wow, there's more money to get in the reverse. So let's go ahead and refinance the reverse. You can also, surprisingly to a lot of people, I don't even know that's anyway. You can buy a home with a reverse mortgage.
Is there such thing as a reverse mortgage call, meaning we want you to pay off this loan now?
So, yes. Let's go back to what we started with, a reverse. In a reverse mortgage, you have to do these 4 things. Pay your taxes, pay your house insurance, live in the home, and maintain the home. You do those things, you're good. If you don't, you'll be getting a few phone calls and some letters in the mail. Hey, we see that maybe your taxes aren't up to date, or whatever. Can we work on that together? Again, the servicer will work with them on whatever the issues are. But it's and of course, I have people that I've helped with reverse who call me all the time. Hey, I got a letter. I got this. I got that. You're my client now. You're my client later. You're my client always.
Raymond, when the homeowner dies, how much time do the heirs or beneficiaries have to sell that home?
Good question. In most cases, you'll find in the contract, as an estimate, it's a standard, between 6 months or so. And if you just call them and communicate, stay in touch and say, hey, I really do need more time. I don't find that my home is selling in the time frame. And they said, okay, well, what do you need? Can you give me 6 more months? Work with them.
Do y'all have them do anything else, like wills, TODs, or transfer on death, deed trust, anything of that nature when you're going through that process?
So I always suggest to everyone, although I don't play an attorney on TV or here, but I always do suggest, talking to their attorney or their financial advisor and get some best practices from them.
Well, since we're talking about seniors, I know senior fraud is kind of like a big thing.
Oh, that is a huge thing. Something I'm glad you brought that up. Senior fraud, not senior frog, senior fraud is daily. I don't know about yourselves, but do you all find yourself receiving text messages? Hey, what are you doing? Hey, I missed your call. We get messages. But some of us, might still have our parents with us. We also get our parents who are receiving the same messages, and I have found more recently that our parents could respond, hey, I didn't send you a message. And I've come across some cases recently where I have found that they communicate and start a relationship over text and then phone call, and then before you know it, I've had one recently where they said, Raymond, I transferred 10 grand to this person that I met, but they're my friend, and it's where are they from? Sudan. You know where I'm going with this.
Yeah. Oh, yeah.
We growing up, some of us are Gen X or so forth, millennial, we're very good at finding these kind of conversations and just eliminating and stopping them. Our seniors, they're the baby boomers and so forth, they're more to maybe this is a real conversation, and I'm afraid they keep getting taken advantage of. So senior fraud is very important, especially since I'm familiar with reverse mortgages. I'm always hyper aware, but I'm also now, more hyper aware that how many times, our parents are, getting these phone calls. Also, not even just text, but they're getting phone calls. Hey, do you know that you've won so much money? But if you simply give me this much money, and here's my, my account, transfer it over, you could get all this money given to you. A lot of our parents, people in the valley, people I've met face to face, sitting on a couch or the kitchen table, they have been taken advantage of. So, if you haven't done so recently, talk to your parents about, what to watch out for and how to prevent that.
Even more so, probably freezing their credit.
Right. Exactly.
Raymond, thanks again for being here. Thanks for sharing all that wisdom. We really appreciate it.
Thank you, Raymond.
Everybody loves Raymond.
Thank you. Everybody does.
And we also appreciate you tuning in to another episode of Our 2 Cents on Your Dollars.